and welcome to another episode within the RALLYTOP Investing private course. Now, in today's episode, we want to discuss a very important subject which is greatly neglected by many traders in the market, and as a result, the success rate in the market is very, very low. Okay? Now, we want to discuss about the topic of risk management. You may want to ask, what is risk management? Well, risk management is simply the amount of money you are willing to lose in the market if the trade or if a particular trade goes against you. A lot of traders are interested in their take profit level and they neglect their stop loss. All right? Many other traders are even trading without stop loss. And this is very, very dangerous. It is a recipe for your account being blown. Okay? So the topic of risk management is as important, or if not more important, than your strategy in the market. So you need to pay very, very great attention. All right? Now, I want you to know that there are three processes that make up the Forex market. Number one is your strategy. All right? And your strategy carries only 10% of that process. Okay? Risk management is the second one, and that carries about 30% of that process. And lastly, the way you manage your trade carries 30% of that process. I want you to understand that very well, because a lot of traders are busy wanting to have a trading strategy and neglecting completely risk management. And this is not good enough for your success in the market. Okay? Now, with that being said, before we get into the risk management proper, I'm going to show you what you can do, all right, to start from a very little amount of capital, trading capital, I mean, to a very great level of return on investment after a period of time, all right? But before we go into that, let's look at some of the pitfalls that we need to avoid in the market. Now, the pitfalls to avoid in the market. Please pay attention to these pitfalls, because it will make the difference between you failing as a trader or succeeding as a trader. All right? So the number one pitfall that a lot of traders have been trapped in is what is known as FOMO. Now, what is FOMO? FOMO is simply fear of missing out. When I first started trading, all right, when I see price moving aggressively on the chart, I will impulsively jump into the market. Why is it? It was because I didn't want to miss out of the trade. The smart money understands the trading mindset of the retail trader, and therefore sometimes the smart money pushes price aggressively to be able to arrest the attention of the retail traders to come into the market so that they can be trapped. Okay? So you do not need to trade on impulse. All right? You do not need to trade on impulse. There is always another opportunity. If your trading plan is not well aligned, if your trading plan is not well aligned in the market, all right, there is no point you jumping into the market. There is just no point. All right? We trade according to our trading plan. I want you to understand that very well. So the first thing you need to avoid is fear of missing out. Fear of missing out. Now, the second thing that you need to conquer is what I call FOPIC. Fear of pulling the trigger. Now, a lot of traders are afraid of pulling the trigger. What you need to do, a successful trader is a trader who understands his edge in the market. You must understand your edge in the market. And anytime you find this edge in the market, you are expected to pull the trigger without hesitation. All right? You need to conquer the fear of pulling the trigger. All right? Whether you like it or not, losses are part of the game. I want you to understand that. So if you are failing to pull the trigger, then you cannot become a successful trader. I want you to understand that. Now, the third thing you need to avoid is greed. Greed. A lot of traders are being slaughtered every day on the altar of the market simply because of their greed. Okay? Do not be hypnotized or carried away by what you find on internet. All right? Somebody telling you that in 2 hours he made $10,000. All right? In 2 hours. Well, I like to trade with achievable goals in mind. I do not like this fluff kind of thing. All right? Where somebody will tell you that he has just made $100,000 in 3 hours. All right? I am not moved by that sort of high. Okay? I want you to understand that. So greed is a great pitfall in the market that has really slaughtered a lot of traders in the market. So avoid it completely. Avoid it completely. Avoid it completely. I have a policy in trading. All right? My target per day is to take 2 trades per day. 2 trades. As a matter of fact, my target in a week is to enter for 6 trades per week. That's my target, and I'm going to be showing that to you. All right? And I've been working with this target for quite some time now, taking 6 trades per week. All right? So I am not greedy, and out of these 6 trades, when it goes my way, my maximum target is 1 to 5. My risk reward is 1 to 5. I'm not interested in taking 1 to 50. I'm not interested in taking 1 to 100. All I'm interested in is 1 to 5. Okay? So please avoid being greedy in the market. Take what the market offers, okay? And be contented with that. Number 4 point you need to avoid is overtrading. Like I told you, I do not trade anyhow. I give myself some targets in a week. I want to see if I can have an opportunity to enter 6 trades in a week, meaning that I want to enter 2 trades in a week, and this is achievable going by our methodology. If you master our methodology, taking 2 trades per day will not be a problem. All right? I want you to understand that. So, stop overtrading. Stop just entering trades anyhow. All right? Stop just taking trades anyhow. You need to avoid overtrading completely if you want to become a successful trader in the market. Now, the next pitfall you need to avoid is overconfidence. Overconfidence has killed many traders in the market, has killed the accounts of many traders. I meant to say, all right? It has killed the account of many traders. Simply because you enter a trade now and it gives you 1 to 20, and you enter another one, it gives you 1 to 10, another one gives you 1 to 50, does not make you a super trader. All right? It doesn't make you a super trader. So you need to stop being overconfident in the market. Make sure you follow your trading plan to the letter. Do not be overconfident and enter trades anyhow. Now, the next thing is analysis paralysis. A lot of traders waste their time so much in analyzing the market, from the monthly time frame, weekly time frame, to the daily time frame, to the 4 hour, to the 1 hour, and all that. You don't need that. You don't need that. All right? 2 time frames are enough for you to make the money you want to make in the market. Just 2 time frames. You don't need to do analysis paralysis. Okay? You don't need to. Simple trade plan. You have your trade plan. This is the way I want to enter the market. All right? I need you to do that, and you don't need to keep your trade plan in your head. You need to write it out and paste it at your desk, so that every time you want to take trade, you follow your trading plan step by step. All right? Analysis paralysis is a great pitfall in the market. Now, the next point is lack of trading plan. Now, if you do not have a trading plan, you are planning to fail in the market. Okay? You cannot be having your trading plan inside your head. You need to write it out and follow every step of that trading plan before you take any trades. If the trade you want to take does not align with your trading plan, please do not take it. Do not take it. Okay? Your trading plan is your compass. Your trading plan is your trading compass that shows you the way. All right? So you need to work with a trading plan. All right? Now, the next one is multiple strategies. You actually do not need multiple strategies to succeed in this market. All right? When I first started trading, someone told me, and I regarded the person as a pro, and he told me that I needed many strategies to be able to become successful in the market. But after years of experience, I've come to realize you do not need multiple strategies. All that you need is one very, all right, powerful strategy. One strategy that has been tested over and over again. All right? That is all you need to become a very successful trader in the market. I want you to understand that. Now, the next one is trading without stop loss. A lot of traders are so confident that they can trade without any stop loss. All right? They can trade without any stop loss. It is a recipe for, all right, destruction of your account. It is a recipe for the destruction of your account. You cannot afford to trade without a stop loss. Your stop loss is your bulletproof. I want you to understand that. The stop loss of a trader is that trader's bulletproof. If you do not use stop loss, it therefore means that you are open to serious attacks, and you don't want that to happen to you. And then finally, inadequate or no back testing at all. When you do not do adequate back testing, all right, you don't do adequate back testing, then you should expect, all right, you should expect, you don't do adequate back testing, then you won't have the confidence that is required in the market. I want you to understand that. And that's why I've been insisting, or repeatedly insisting, on you guys doing adequate back testing. All right? So these are the pitfalls you need to avoid in the market if you want to become a successful trader. Okay, so much for that. Let's now get to the numbers and the figures. All right? So now, here is what I have just drawn. This is from personal experience. All right? Now, this is month from January to December, as you can see on this table. All right? And then I have my maximum stop loss. Maximum stop loss is 10 pips. And this 10 pips is constant throughout the 12 months. Why is it 10 pips? Well, it is 10 pips because I know sometimes it can be less than 10 pips, but cannot be more than 10 pips. Why is it? It is because in our methodology, we trade using the 1M time frame or the 5M time frame. And because of that, we know that our stop loss will be minimal. All right? So max is 10 pips, but it can be less. But max is 10 pips. All right? And that 10 pips is constant. All right? These are achievable numbers that we can work with. All right? Now, maximum take profit. This maximum trade take profit is 50 pips. That's the maximum. 50 pips. Meaning that with your stop loss being 10 pips and your TP being 50 pips, that is 1 to 5. That's 5% of your account. All right? 5% of your account. That's huge. Do you understand that? So 50 pips. So once you enter the market with 10 pips stop loss, once price moves 50 pips thereafter, you can lock your 5% profit. All right? And if you would like to continue, then you can continue. You can start trading your stops. But for me, once I make that 1 to 5, all right, I will be more than happy to call it a day on that day. All right? It all depends on you. Now, trading account, how much are you starting with? With $100. Just $100. All right? In the month of January, you start with $100. All right? Now, maximum risk per trade, maximum is 1%. 1% maximum. All right? And that maximum 1% risk is constant for the 12 months. All right? Constant. Now, number of trades per week. January, 6 trades per week. 6 trades per week. Like I told you, I aim to take 2 trades per day. All right? Meaning that 6 trades per week should be able to give me, I should be able to have them in 3 trading days. You know, we have 5 trading days, but I'm looking at it in 3 trading days. All right? This is very much achievable. Very, very much achievable going by our methodology. All right? Now, number of losses per week. Out of the 6 trades, we will lose at least 2 trades. All right? At least 2 trades. If you are a careful trader, at least you should be able to win 4 trades in a week and lose 2 trades. Now, this 2 trades is constant. This 6 trades per week is also constant. All right? Now, number of wins per week is 4. Out of 6 trades, you lose 2, you win 4. All right? And that 4 is constant throughout the 12 months. All right? Now, monthly losses will come back to that. All right? Because we are taking 2 losses per week. Okay? So if you multiply 2 times 4, that will give you $8. We lose for that week. All right? I mean, for that month, we lose $8 for that month of January. And then monthly profit. The first profit you will make in the first month is $80. That is based on the $100 trading account. So you will make $80. All right? That means that you have made 80% of your trading account in the first month. All right? And when you add this $80 to your trading account, which is $100, you have $180 at the end of January. All right? Now, February, we start again with our maximum stop loss being constant, our take profit being constant. Then our trading account will change because we have made 80% gain or profit of this $100, which is $80. And therefore, we now have $180 to trade with in the second month. All right? Now, after that, our maximum risk continues to be 1%. It's constant for the whole of that 12 months. Okay? And then the number of trades per week is constant, which is 6. And the number of losses constant, which is 2. Number of wins constant, which is 4. And then we now have monthly losses, which is $3.6 times 4. All right? Do you understand? Times 4. Now, that will give us $14.4. All right? Now, the monthly profit will be $144. And now, if you add $144 to $180, then you have $324 at the end of the second month. All right? Now, if we go to the third month, which is March, everything constant here, but our trading account will change. So our trading account will change to this 324, all right, which is here, 324. So in the month of March, we have $324 to be trading with. Remember, we started with $100. So now, by March, 3 months after, we are having $324 to trade with. And our risk per trade is constant, 1%. All right? That's maximum risk, 1%. And now, our trades for the week is 6. And our loss is 2. Our our wins, 4. And then, because we have lost 2 trades per week, all right? We lost 2 trades per week. If we multiply it by 4, that 2 trades per week will give us $6.48. So we multiply it by 4, and that will give us $25.92, all right, as what we will lose in the month of March. All right? Now, but the profit for the month of March will now be $259. And at the end of the month of March, we now have $583. Can you see that? Now, $583, we move to April, which is the 4th month. Now, stop loss, take profit, constant. And then our trading account will now change from $324 to $583 that you find here. All right? So this is $583. And then our risk, maximum risk, remains constant, which is 1%. And the trade per week, the number of trades per week is 6. And the number of losses is 2. And then the number of wins per week is 4. And then we now have $11.66 times 4. And we now have $46.64. That is what we are going to be losing in the month of April. $46.64. All right? This cannot cause you sleepless nights. All right? Why is it? It is because your risk management is very, very effective. All right? So now, in that month of April, we now have as our total profit $466. Now, if you add $466 to $583, it will give you $1,049. Can you see that? $1,049. So in the 4th month, which is April, from $100, we are going to be trading now with $1,049. All right? And therefore, we move to May, everything being constant here, and then our trading account will change here to $1,049. That's the amount we'll be trading with in the month of May. All right? Every other thing here is constant, and then our loss, our monthly loss, is $20.98 times 4, which will give us $83.92. Okay? It gives us $83.92. So in the month of May, we'll be losing $83.92. All right? But how much are we going to be gaining that month? We'll make a profit of $839. All right? And if you add $839 to $1,049, it will give you $1,888. Can you see that? Now, in the month of June, which is half year, everything being constant, but our trading account will change. It will now change to $1,888. All right? Every other thing remains constant. And then our loss for the month will be $37.76 times 4, which will give us $151.04. $151.04. All right? That's what we are going to be losing throughout the month of June. And then throughout the month of June, we make a profit of $1,510. And then if you add $1,510 to this $1,888, you end up having $3,398. Okay? Now, we move to July. July, everything constant. Our trading account will change to $3,398. That's what we'll be trading with in the month of July. All right? Every other thing now remains constant. And then our monthly losses is $67.96 times 4, which will give us $271.84 as our losses. All right? And in the same month, our profit amounts to $2,718. All right? $2,718. And the total profit, if you add this to our $3,398, then you will have $6,116. All right? That's in the month of July. All right? Now, in the month of August, everything remains the same, but our trading account will change to $6,116. Remember, we started with $100, and now in the month of August, we are talking about 6,000 plus. All right, 6,000 plus dollars. That's huge. Now, everything remains constant. Everything remains constant, and then in the month of that August, all right, in the month of August, we lose. The total loss we'll make in the month of August will be $489.28. All right? And then our profit for that month of August will be $4,892. Now, if you add this, $4,892 to $6,116, all right, it will give you $11,008. Can you see that? This is huge. September, the month of September, everything remained constant, but our trading capital will change. We'll be trading with a capital of $11,008. All right, and all other things remain constant. And then our total loss for the month of September will be $880.64. All right, that will be our total loss for the month of August. For the month of for the month of September, I meant to say the month of September. All right, and then in that same month, we'll make a profit of $8,806. And if you add this $8,806 to our trading account, you will have $19,814. Now we move to October. The same, everything constant, but our trading account will change to $19,814, and every other thing remains constant. And in that month, we'll be losing $1,585.12. All right? Why is it increasing? Well, it's increasing as our trading account increases. All right? Now, in that same month, we'll make a profit of $15,848. $15,848. And if you add this to our trading account, the already existing trading account, then we'll end up having $35,662. All right, that will be in the month of October. Now, in the month of November, our trading account will change to $35,662. All right, everything remains constant. And in that month, we'll be losing $2,852.96. All right, and in that same month, we'll be making a profit of $28,529. Now, if you add this to our trading account, all right, if you add it to this, our trading account, which is $35,662, it will amount to $64,191. That is in the month of November. This will be our trading account in the month of November. And so we now move to the last month of the year, which is December. Our trading account is $64,191. Every other thing remains constant. And our loss for that entire month will amount to $5,100. It will amount to $5,135.28. All right. And in the same month, we'll make profit of about we make profit of $51,352. All right. If you add that to our trading account here, it will give you $115,543. Can you see that? This is amazing. This is huge. This is crazy, guys. All right. This is crazy. These figures are clearly achievable. Clearly achievable. All right. Now, remember, our maximum take profit remains 5% per trade. Just 5% per trade. We are not aiming at 10% per trade, 20% per trade, just 5% per trade. All right. So at the end of the 12 months, you will make a profit of $115,543. Your account would have grown from $100, all right, to $115,543. Can you see that? This is crazy. And the grand total is that we, in the whole of that 12 months, our stop loss was 120 pips, and our take profit was 600 pips. All right, just 600 pips for the whole of the 12 months. But look at the amount of profit we made. All right, crazy. This is compounding. And then in that whole year, our maximum risk was 12% for the whole of the 12 months. And we took the whole of that time, we took 72 trades in the whole of that 12 months. And we had, out of the 72 trades, we had 24 losses and 48 wins. Can you see that? We had 24 losses and 48 wins. All right. And our total loss for the month, for the year was $11,537.04. The total amount we lost was $11,537.04. All right. Now, if you remove that, then you'll be having, if you remove that from this, then you'll be having 104,000. All right, $104,005.96. So huge, from $100 to over $100,000 in just 12 months. Guys, think about it. Think about it. In just 12 months, from $100 to over $100,000. Think about it, guys. This is the power of compounding. Is the power of compounding. All right. So if you are that type of trader that is carried away by people saying they have made $100,000 in 2 hours, they have made 100 pips, 80 pips, 10, 20 pips, and all that. You don't need all that. All you need is achievable goals. And if you can make consistently 1 to 5, that is very much achievable. Okay, it's very much achievable. And I want you to really work yourself towards this. I'm going to leave these numbers and figures, all right, in Excel format in our VIP community page. All right, so you can check it out. All right, and then you can do the mathematics yourself. Okay, you can do it yourself and see how it goes. This is how you can actually manage your risk in the market. You don't need to risk more than 1% of your account at any time at all. All right, don't risk more than 1% of your account. Okay, I want you to understand that. If you are risking 1% of your account, meaning that $100, you have a trading account of $100. What is 1% of $100? Okay, it's simply $1. All right, it's simply $1. Is it? Yes, it's simply $1. So you don't trade with a risk of more than $1 if you have $100 account. Okay, I want you to understand that at every point in time, even if you have $1 million, you trade with 1%. But at the end of that 12 months, you will now raise your maximum risk, because it is assumed that after 12 months, you would have gained enormous experience. All right, you have learned your lessons in so many things, and so you can increase your maximum risk. All right, but not more than 3%. You don't just move from 1% to 3%. All right, you move gradually. That is how to make a career out of this very industry. Okay, I want you to understand that. I hope this has opened your eyes. I'm going to also leave the Excel version of it in on our VIP page. So please feel free to check it out and do the mathematics yourself. All right, guys, I see you in our next class.